Warm greetings from Thrissur Management Association. The entire world is passing through a challenging period due to the outbreak of coronavirus COVID-19. Our country is also trying our level best to contain the spread of coronavirus. Last several days, our entire country was under lockdown to contain the spread of coronavirus. We are not able to conduct any meetings or gatherings for our members due to the restrictions. This is one of our initiative to reach our members through a video. You know, capital market is one of the worst hit area due to the impact of coronavirus. Today we are presenting before you a topic, capital markets on the corona grip, a peep into the future. The session will be led by our past president and former chairman of CSB Bank Limited, Chartered Accountant CA T.S Anantharaman, who is also an investment consultant. Last several days, he was studying the impact of coronavirus in the capital markets. He was studying the impact of coronavirus in the capital markets. He will present the topic before you. He will go through the length and breadth of the subject. We will come back to you with a lot of programs like this in coming days. Wish you a very fruitful session ahead. Stay home, stay safe. Thank you.
Hi, today I'm going to talk on the topic capital markets on corona grip, a peep into the future. Capital markets in India have been going through a new phenomenon in the last more than 2 years. There was growth and traction only in the top 20 companies. Most of the others, including some established large cap companies, as well as most of mid cap and almost all of small cap companies, have been badly battered beyond recognition. This trend was changing for the better from, say, August 2019 onwards because of some governmental action and some other positive developments in the economy. But corona grip has punctured that again. Corona has been occupying headlines all over the world for the last few months. Most of the major economies, America, Europe, Japan, China, have all been very seriously affected by that. Probably India is one of the few countries where the impact has been somewhat contained by the extraordinary measures taken by the government in time, although we do not know what is exactly in there for the future. What is the present situation? The stock markets have collapsed all over the world. In India, at one time, towards the end of March, the markets had collapsed by 39% in just a few weeks' time. The Sensex crashed by more than 16,600 points from 42,274 to 25,639 points. We have never seen such a phenomenon earlier in such a short time. On 2 days, the 12th March 2020 as well as on 23rd March, the markets were closed for trading for 45 minutes because as soon as the markets opened for that day, it collapsed by more than 10%. This has happened last time 12 years back in 2008. After that, closure of the market in India has never happened. Now, last few days, because of the governmental action and evaluation that after all, corona grip may not be that very bad as originally anticipated last month, possibly because of all these things, the markets have recovered a bit by about 20%, and today it is around, Sensex is around 30,700. All the major economies in the world are on shutdown mode. All the major economies. And nobody has found a cure for it till now, although extensive research is happening all over the world, including in India. No cure has been found till date. India also has been having some extra problems in addition to these because of the slowdown that we saw in the economy in the last 1 to 2 years, and the non-performing assets in the system has been there in the financial system for quite some time. So this is in addition to the other problems. The world is experiencing recession even before because of the US-China trade dispute, US-Iran sanctions, and so many other things. That is a time when corona has come as a very serious strike on the financial system. When you look at the situation today, there is so much of pessimism around the world that is there any scope for improvement? I honestly, sincerely think that there is room for optimism, at least a moderate optimism, into the medium to long term. No doubt, we are in extremely difficult times, and anyone saying that things are going to improve, I think will be in a big minority. But my reason for optimism is based on several factors. First of all, let me take past similar cases when the markets have collapsed. One is a global financial crisis that struck the whole world in 2007-2008 period. At that time, the market cap to GDP in India was 150%, whereas when the crisis hit now, the market cap to GDP is only 70%. That means markets were not very high when this crisis struck. So that means we are slightly better compared to 2008. Similarly, corporate profit cycle was peaking at that time. But now, analysts are generally unanimous that the corporate profit cycle is going to only improve, although there might be a bit more of delay because of the corona crisis now. Similarly, the NPA situation, the problem was just starting at that time. Whereas now we have gone through that problem for the last 3-4 years, and we expect that things are going to be slightly better into the future, as most of the non-performing assets have been written off in the banking system. Also, the worldwide there was a financial freeze. The financial markets in all parts of the world had frozen at that time. Whereas what we witness now is more a health problem. And definitely it has affected the economy, but it is more a health problem which is adversely affecting the system, but not a financial problem by itself. Second thing, look at the similar health hazard that has happened in the past. There have been a number of them. 2-3 important ones with the SARS crisis that hit the world in January to March of 2003. At that time, markets collapsed by 10% in India, but within a year, it shot up by 85%. The avian flu that happened in early part of 2004, markets shed 12% immediately, but within a year, it shot up by 50%. The Ebola crisis, which affected many parts of the world, but somehow it bypassed India. So it did not affect the markets much, but that was in 2013-14, end of 13, early 14. But After 1 year of that crisis, markets went up by 39% in India. The Zika virus, that was 2015-16. Our markets slid by 13%, but again improved by 24% within 1 year. What about Corona? It is, what we know now is markets have gone down by 39%. After 1 year, what it would be, search me, nobody has an answer. The other important point is talk about the economic reforms in India. Last few years, we have seen unprecedented economic reforms in India. The GST, the Real Estate Regulation Act, the Insolvency and Bankruptcy Code, the New Companies Act, the Direct Benefit Transfer, substantial corporate tax cut, historic one. I've never seen such things before. All these things would definitely take time for the benefits to go down to the common man and the economy at large. But we are already seeing the benefits of some of them already. Another point is the macroeconomic fundamentals. I would say generally the fundamentals in the economy are quite in decent shape. Take the forex reserves, record high. Black money and corruption substantially down. Interest rates have been going down. The ease of doing business, the international index, we are at its best now. It is from about 135 in the world order, we are in the 60s now. A lot of cleaning up has taken place in the corporate setup and structure in the last few years. Probably that's one of the reasons why the economy has been slowing down a bit. A lot of these reforms, a lot of this cleaning up, all these are painful process. But into the medium to long term, all these give tremendous benefits and advantages. Also, the valuation in the stock markets because of all these have become quite reasonable. Recently, Stephen Schwarzman, the managing director and CEO of the world's largest real estate fund, the Blackstone, was in India, and he made a categorical statement that in the next 3 to 4 years they are going to double their investment in India because India gives them the highest return anywhere in the world. Do you know they've already invested more than $15 billion in Indian real estate? They're so optimistic on the potential for the Indian economy and investments here. One more point is the indirect benefits coming out of Corona. Two things I'll mention here. One is the collapse of the international crude price. Crude for India is one of the most important items of import. We import 85% of that commodity. $1 reduction in crude means a saving of more than 10,000 crores in foreign exchange. Remember, in the last 1 month, crude has collapsed by more than $30. Imagine the benefits accruing to the Indian fiscal situation as well as the foreign exchange. The other indirect benefit is the speeding up of movement of companies from China. Major American and Japanese companies have been putting up very huge factories in China and making it as part of the international supply chain. The problems that have come in China, even before the corona crisis, many companies have seriously started thinking in terms of moving away, and some have actually started moving. Japan has created a special fund to encourage companies to move away from China and then locate into countries, and probably India could be a very interesting destination, especially when you look at the fact that in the latest budget, just before the budget, the corporate tax were cut to such an extent that probably India is the lowest corporate tax rate in the world now. Ease of doing business has also improved tremendously. Because of all these things, companies thinking of shifting from China would definitely find India as a very interesting destination. One more point I'll make, which gives me the room for optimism, is there is a recent Deutsche Bank estimate which says that $15 trillion of bonds in the world bond markets are trading in negative interest rate. This means when you invest in the bond and the time for return of the money comes, you get less than what you invest. That is negative interest rate. Why am I mentioning it here? Simply because in the latest budget, 2020 budget, our finance minister said sovereign wealth funds investing in Indian infrastructure, their entire return, interest, dividends, whatever it is fully free of tax. When you take into account this type of development with improvement in ease of doing business and companies wanting to move away from China, all these things put together, I firmly believe that substantial funds from sovereign wealth funds would flow into India, into the infrastructure sector, which certainly is one of the biggest job generators in India. All these things put together, I feel once the crisis is over, it has to be over after a few months, I think there is reasonable room for optimism. Now, let me talk a bit about the future possibilities and the course of action. The human tragedy arising out of this crisis cannot be explained away easily. I'm not talking about that here. I'm not a doctor. That's well documented, well reported in newspaper. Let me talk about the economic aspects. Major sectors of the economy like travel, tourism, hospitality, financial services, especially the microfinance, all these will be adversely affected. So would be companies which are highly leveraged. Avoid them. Investment in these could lead you into trouble. But certain other sectors like technology, chemicals and healthcare, crude derivatives like paints, cement, all these could benefit from when you look at the investment from the present situation. As far as investors are concerned, they should be very careful, extra careful, because nobody knows when this crisis is going to end. They have to enter the market in a very calibrated manner. Don't invest in a hurry just in one lot. Make it into different lots in a very calibrated manner, because when this crisis is going to end and normalcy return, nobody really knows. Second aspect to be very carefully considered is no leverage. If you borrow and invest in the market, you could end up in serious trouble, because when the crisis ends, nobody knows. So let me conclude. If you have reasonable liquidity with you, if your risk appetite is good, if you have the luxury of time with you, and if your risk tolerance towards volatility is acceptable, I think this is a time you should start investing in the market. When you invest, I would definitely suggest that you look for established, good quality, large cap and medium cap companies. If you want to invest in small cap, you are going to be extra careful, because how many small cap companies will survive this difficult situation, nobody knows. So if you are still wanting to invest in them, yes, go for mutual funds specializing in small cap, or you do extensive detailed research, consult some experts, and then you can invest in small caps, because returns there could be much higher if you hit the right companies. So this is time for investment. Be very careful. Extra vigilance is called for at this time, but if you are brave enough to do that, returns could be very substantial. Happy investing. Thank you.